92% of people who think they're trading are actually gambling. You probably don't want to hear that. You've got indicators on your charts, you've read books, you have a strategy, sort of. But here's the thing. I've watched hundreds of traders, and the ones who blow up within 18 months all share the same 5 patterns. They call it trading, the market calls it gambling. And if you recognize even 3 of these signs in yourself, you need to stop right now and hear every word of this. Because the difference between trading and gambling isn't what you think it is. It's not about risk, it's not about analysis, it's something else entirely. But first, you need to see what gambling actually looks like when it's wearing a trading costume. Here's a test. Right now, without preparation, explain your trading edge in one simple sentence. Not your strategy, your edge. Why you make money when you win. Can't do it? That's gambling. Marcus couldn't do it either. Software engineer, smart guy, had 47 indicators on his charts. I asked him, "What's your edge?" He talked for 6 minutes. Moving average crosses, RSI divergence, volume confirmation, support and resistance. When he finally stopped, I asked again, "But what's your actual edge?" He got frustrated. "I just told you." No, he told me his process, not his edge. 3 months later, Marcus was down $18,000. Here's what happened. Without a clear edge, every trade becomes discretionary. You see a setup, looks good, you enter, it works, validation. Next setup, looks good, you enter, it fails, confusion. You modify the rules because clearly something was wrong with that signal. Now you're trading a different system, which works twice, fails once. Modify again. 6 months of this, and you're not trading a system anymore. You're just doing stuff, hoping. That's gambling. Compare that to Taishi, former casino dealer. Ironic, I know. I asked her the same question. She said, "I buy breakouts of consolidation when volume expands above average. My edge is that momentum continues more often than it reverses when volatility contracts first." One sentence, clear, testable. She can execute that drunk at 3 a.m. She doesn't, but she could. That's the difference. If you can't explain your edge in one sentence, you don't have an edge. You have a collection of stuff you do. That's not a system. That's a slot machine where you occasionally pull different levers. Tonight, before you sleep, write down your edge in one sentence. If you can't, you found sign 1. Don't ignore it. Sign 2. Your position sizing changes based on how you feel. Sarah made $11,000 on 3 trades, felt amazing, invincible. Next setup appears. She's thinking, "I'm hot right now, let's make this count." Doubles her normal position size, loses $6,300 in 40 minutes. Sound familiar? Position sizing is supposed to be mathematical. Risk 2% of your account, or 1%, or 0.5%, whatever. The number doesn't matter. What matters is the number doesn't change based on your feelings. But you've done this. We all have. Coming off a winner, increase size because confidence is high. Coming off a loser, decrease size because scared. Some days you risk 0.5%, other days 3%. Depends on mood. That's not trading. That's emotional gambling with math clothes on. I tracked 200 traders over 14 months. The ones who survived had consistent position sizing. Boring consistency. Same risk every trade, regardless of conviction or recent results. The ones who blew up, their position sizing looked like a heart rate monitor during a panic attack. Up, way down, spike up. They were gambling their account size on their emotional state. David, 9 years profitable, still trades full-time, told me something I'll never forget. My position size is determined before I even look at charts. I calculated Sunday night based on my account balance. Then I don't think about it again all week. Every trade risks exactly 1.2%. Doesn't matter if I'm up, down, confident, terrified. The math doesn't care about my feelings. That's what separates traders from gamblers. Gamblers adjust their bet based on how lucky they feel. Traders adjust nothing because luck isn't part of the equation. Check your last 30 trades. Look at your position sizes. If they vary by more than 20%, excluding different account balances, you're gambling. The market doesn't care about your feelings. Your position size shouldn't either. Sign 3. You're trading more when losing. It's 2 p.m. You're down $400. Took 3 trades, all losers. Your system says stop at 3 losses or end of day, whichever comes first. You see another setup. Not your best setup, but it's there. Your hand moves to the mouse. This is the moment. Traders stop. Gamblers click. Michael, accountant, meticulous with everything except trading, told me about the day he blew up. Started with 2 small losses in the morning. Fine, happens. Third trade went against him immediately. Cut it quick. Down 500 by lunch. This is where it gets interesting. His rules said stop. He had 17 other days exactly like this in his journal where he stopped and walked away. But this day, something felt different. It never is. He took trade 4, then 5, then 6. By close, he'd taken 11 trades total, down $2,300, largest single-day loss of his career. "What were you thinking?" I asked him. "I just needed one winner to feel better." That sentence right there, that's gambling psychology, not trading psychology. Trading psychology says, the day is over, results are irrelevant, process matters. Gambling psychology says, I need to win before I can stop. Casinos know this. They call it chasing. You're down, so you play more, trying to get back to even. The house edge doesn't change, your odds don't improve, but the emotional urge to recover losses is so strong that logic evaporates. You've done this. Maybe you called it working through a drawdown or staying active to find your rhythm. But if you're taking more trades when losing and fewer when winning, you're gambling. That's gambling. The traders who survive past 18 months do the opposite. They trade less when losing, more when winning. Not because they're geniuses, because they have rules that force this behavior, and they actually follow those rules even when it feels terrible. Write this down. When I hit my daily loss limit, I close my platform. No exceptions. If you can't follow that sentence for 30 days straight, you're gambling, not trading. Sign 5. You check your P&L more than your process. How many times did you check your profit and loss today? 5 times? 12? 17? I used to check mine 23 times a day. I counted once because I was horrified at myself. Here's why this matters. Every time you check your P&L, you're measuring outcome instead of process, and outcome is random over small samples. You can execute perfectly and lose. You can execute terribly and win. If you're checking P&L constantly, you're training your brain to focus on the wrong thing. Jennifer, former teacher, now trades part-time, had this problem severely. She'd check her account balance between every trade, sometimes during trades. She knew her P&L to the dollar at any moment. I asked her, "How many trades did you take today?" She couldn't tell me. "What was your execution quality?" She hadn't thought about it. "Did you follow your rules?" She thought so, but wasn't sure. She knew she was up $247, but she didn't know if she'd actually traded well. This is backwards. Professionals track process metrics, trades taken versus opportunities seen, rules followed versus rules broken, execution quality scores. P&L is just a side effect of process. If your process is good, P&L takes care of itself over time, not over days, over months. After Jennifer started tracking process instead of profit, something shifted. She made a spreadsheet. Every trade got a score. Setup quality, 1 to 5. Entry timing, 1 to 5. Exit execution, 1 to 5. Rules followed, yes or no. Total points possible, 16 per trade. She aimed for 13 plus average. Some trades lost money with perfect scores. Some trades made money with terrible scores. But over 8 months, her average process score went from 9 to 14. Her P&L went from roughly break-even to consistently profitable. Correlation? She stopped checking P&L entirely during trading hours, just tracked process, checked results once at day end. That's it. If you know your P&L better than your process, you're gambling. Gambling is outcome-focused. Trading is process-focused. The difference is everything. Sign 5. You can't take a week off without anxiety. This is the one nobody wants to admit. You plan a vacation. You're supposed to be on a beach, relaxed, with family. Instead, you're checking charts on your phone. You tell yourself you're just monitoring, but you know what's really happening. You're terrified you'll miss something. The market will move without you. Opportunities will vanish. That's not dedication. That's addiction. Robert, managing a small fund, profitable for 6 years, told me he used to be like this. Couldn't go 2 days without trading. Even when he was sick, even when the market was clearly choppy and terrible, he had to participate. When I asked why, he said something that stopped me. I was scared that if I stopped, I'd realize I didn't actually need to trade every day. And if I didn't need to trade every day, maybe I was overtrading. And if I was overtrading, maybe that's why I kept giving back my winners. He was right. When he finally forced himself to take 5 consecutive trading days off, his wife literally changed his computer password. He came back and looked at what he'd missed. Out of 27 setups he would have taken, only 8 were actually high probability. The rest were boredom trades, marginal trades, trades he took because he was there and the market was open. Real traders can walk away, not just physically, but mentally. They know their edge doesn't vanish because they took a week off. They know the market will still be here. They're not scared of missing out because they understand something gamblers don't. There will always be another trade. Gamblers can't walk away. The action is the point. Winning would be nice, but the action, the adrenaline, the hope, the possibility, that's what they're really after. If you feel anxious when you can't trade, that's not healthy caution, that's dependency. Try this. Take next Monday through Wednesday off. Don't open your platform, don't check charts. Just 3 days. If the thought of doing this creates significant anxiety, not just mild concern, but actual anxiety, you found sign 5. And that's the most dangerous sign of all, because it means you're not in control anymore. The activity is. Here's what this actually means. You have 2 options right now. Option 1, recognize these signs, feel defensive, close this tab, tell yourself you're different, keep doing exactly what you're doing. 6 months from now, you're still struggling with the same patterns, still calling it trading, still losing. Option 2, accept that maybe, just maybe, you've been gambling with analysis instead of trading with a system. Take tonight, not tomorrow, tonight, and write down your actual edge in 1 sentence. Calculate your correct position size and commit to using it regardless of feelings. Set a loss limit and actually stop when you hit it. Start tracking process instead of profit, and plan 3 consecutive days off for next week. The traders who survive do this differently. They have clear edges. They have consistent sizing. They have loss limits they respect. They focus on process. They can walk away. That's not talent. That's structure. And structure is what separates trading from gambling. You've spent several minutes here. You recognized at least one of these signs, probably more. Don't let that recognition go to waste by not acting. Most people will read this, nod along, and change nothing. You're not most people. You prove that by making it this far. Now prove it by acting. Tonight, not tomorrow, tonight. Drop a comment and tell me which sign hit hardest, the one you recognized most in yourself, because naming it is the first step to fixing it, and fixing it is the difference between surviving and becoming another statistic. Your edge isn't your indicators.
It's your ability to execute a plan regardless of how you feel. And if you don't have a plan clear enough to execute, you're not trading. You're gambling with extra steps.